6% max drawdown on a $5,000 account. Damn, this is going to be tough, especially when you are trading volatility 75 index. One wrong move and boom, it's over before it even starts. So will I survive this time around, or will I lose the account like my previous 4 accounts? I've been backtesting for a very long time, which is why I haven't been posting that much on my YouTube page, just once in a while. So after a lot of backtesting and refining and finally deciding which strategy to stick with, I was ready to start trading a live account again. So I had an option of either I try to grow my live capital, which is around $30, or I get a Profem account. Right, so I decided to go with a Profem account, and my initial plan was to go with funded next, but my capital was not enough to get the account. Right, so while I was waiting, I got an offer from someone in my engineering class on BloomFunded Profem accounts. It's a synthetic index Profem account. So after a little bit of discussion, I went to make some research about the Profem, though I just saw some few videos. I did not really say much. So since that was the money I had, I decided to just risk it. Hopefully it goes well. So right now, that's the account I'm trading. I will talk about the accounts and their rules, and the one that's going to be difficult for me. The rules for Bloom funded prop firm is just similar to all other prop firm that you know about: fundedness, good funded, FTMO, and so on and so forth. So, but the two rules I'm focusing on is their max drawdown, which is 6%. For fundedness, it's usually 8% or 10%, depending on the accounts you're going. But for Bloom funded, it's 6%, which is going to be a little bit tough. But well, I shall trust my current system, so I'm just going to continue trading it like that. So that's that. And then the second rule, which I'm looking at, is minimum profitable trading days. I think fundedness don't have this rule. For fundedness, you just need minimum trading days, right? So just for you to trade, place a trade within 4 days. But here they say minimum profitable trading days. You get, so that means you have to make profits at least 4 times before you can be considered to successfully pass the account or to request for payouts, which made me to change my initial rule, because my initial plan was if I pass the account, once I make profits, I request for payouts immediately. But that plan is not going to work again. So this is what we have. This is what we are going to work with. Let's see how it goes. I'm going to be dropping my weekly trade recap. So if you guys want to see the video, you can comment in this. You can drop your comments in the comment section. So what I'm going to talk about now is the strategy I'm going to be using for this Profem account. I'll just talk a little bit about it and maybe show you 1 or 2 examples, and that will be it. So let's get to it. So the strategy is called the daily continuation strategy, or you can just call it DCS for short. So the concept came from the one candle theory that people usually talk about online, and I've actually made a video about it before, my first backtesting video, where I talk about CCT and CRT, that is candle continuity theory and candle range theory, right? So all of them are basically the same concept. So what does it mean? What does the strategy do? So the concept is basically that the current day candle is most likely going to go in the direction of the previous day candle. That is, if the previous daily candle was bullish, the current day candle is going to be bullish. If it was bearish, the current day candle is going to be bearish, right? But then before, I did not have a refined entry, or I don't know where to enter from, right? So what I just need to do is just look for a best price to enter from. I don't need confirmation. I don't need all those things. I just need a best price to enter from. That once I enter from, my stop loss will be a little bit safer. You get, so that's just the strategy. So you can see in this diagram now, we have day 1 and day 2. So you can see in day 1, price is mostly trending bullish. In this day 1 now, my entry time frame is 1 hour time frame. So On this day one, if you're on the 1 hour time frame, you see that candle is mostly trending bullish, creating higher highs and higher lows, right? But on the daily time frame, overall the candle is a bullish candle. If you go to the daily time frame, this day one candle is a bullish candle. That is why I presented it today. You get the point. So since we are bullish, what are we going to do in day two? We may are also going to go bullish in day two, but where are we going to go bullish for? So this is what we now have. So on day two, we have, this is our closing price of day one. You're going to mark that out, right? Our closing price of day one, I mark it as an open. So for me, I don't usually switch time frame. I just stay on the 1 hour time frame. But how do you know if the previous day was bullish or bearish? It's easy. Just mark the closing price of the previous day and the opening price of that same previous day. So this was the opening price of the previous day, right? So you can see that the closing price is higher than the opening price, which automatically makes it bullish. So that is it. So once you have gotten the opening price, right, the closing price of the previous day, which I marked as my open, remember that we are to buy in this scenario. So what am I going to look for? I'm going to look for support levels, which is swing highs. We are buying, we are looking for supports. We are looking for support levels that have been broken before, below this opening price. It must be below this opening price, not above, right? So what are my support levels? Here you can see we have this one breakout level. Support levels or breakout levels because price has broken that level before, right? So we have that one and we have this one here. So these are my support levels. So we just need to take a trade within one of these levels. If you want to be a confirmation trader, right, if you want to look for confirmation entries, which I think might give you higher win rates and maybe higher IRR too. But me, I don't have time for that because I'm a student. So I prefer to do is that once the next day happens, I look for my support or resistance, place a limit order, and then leave it for the day. For it to go to TP or SL. I set my alerts so I can be sleeping. Trade to trigger my trade will trigger and hit my tip when I'm still sleeping and stuff. I don't have to look for it. I don't have to look at the chart again the entire day. Until that day finish, I'll come back and do the same thing. You get. But if you want to be a confirmation trader, you can look for confirmations at this level because we don't actually know the exact level that's going to work out. But for me, what I usually do is I go with the highest one, this breakout level, the highest one. I delete this one. I work with the one that's up there. So I just place my limit order once I've gotten my level. Place my limit order. Place my stop loss as this swing low of the entire breakout, and then my target is going to be 1:2, just like this, something like that. That's my target. So this is for the buy scenario. Now for this same bullish price action, we also have a reversal scenario, right? So there are actually 4 scenarios in this strategy. So this is the buy when the previous day is bullish. Now when the previous day is bullish and I want to trade the reversal, what is going to happen? This is what is going to happen here. So we are going to have, we still have the open level, we have the breakout level, but this time around we are going to work with the highest point of that day, right? This is the highest point of the previous day, which is a liquidity level. So what we are going to do here is, if price did not come and give us an entry, but price went up first, took out this high, and then touched this open, you don't need to break, you just need to touch with a bearish candle, right? With a bearish candle, then as long as price has not triggered my entry yet, I will delete my limit order and then take a sell from this level. My stop loss at the any closest swing high there, and then my target again still 1:2 RR. So that is it. Those are the 2 scenarios for whenever the previous day is bullish, right? So for the sell setup is opposite. It's opposite, right? So this is what we have. One more thing, for this reversal setup, I usually take it because you can take it anytime if you want, obviously. But for me, to avoid confusion and other stuff, I usually take it from, that means I don't take this setup between, if I'm using New York time, that is going to be 5 p.m. New York time to 12 a.m. New York time. In Nigerian time, that is going to be 11 p.m. to 6 a.m. Nigerian time. You get, so those time I will sleeping. I will only come back to look for the to check if which of the setup happened, then I would take my entry. But for the breakout, since it's a limit order, I can just place it before I sleep. But for this one is a market entry, so I need to be on the chart to place this one. So that is that scenario. Then for the sell setup, it's just vice versa, right? Vice versa. So let me show you some examples. All right, let's work with this example. So I'm going to use this as my day one. This is going to be my day one, and this is going to be my day two. We are on the 1 hour time frame, remember. So that's going to be my day two. So remember, we are trading in the direction of the previous day. So let's see, was the previous day bullish or bearish? This was the opening price of the previous day. That's the open. And then this was the closing price of the previous day. So you can say it is higher. That means we are buying, right? So let's delete this. We are buying. We just need that opening price. So what am I going to mark next? I'm going to mark my previous day high, which is this high, the highest point, just in case I'm looking for reversal setup A. After marking that, what am I going to mark next? Below this opening price, I'll mark any closest breakout level. So let's mark out all the breakout level we have. We have this breakout level. So we have that breakout level. Do we have any other one? Let's see. Yeah, we have another breakout level. But like I said, I'm only going to go with the top one. I'm only going to go with the top one, which is this, right? Which is that top one. So once I've gotten it, what's the next thing I'm going to do? Once price open, I just place my limit order here. Just as simple as that. No stress. This is a no stress trading strategy. And my stop loss is going to be the lowest point of this breakout. What this swing leg that caused the breakout. So that is it. And my target is 1:2. So you can see how we hit that target easily. Price came back, retested, and went up again. But for my I just go for a simple 1:2. Now let's see if you are to take a confirmation entry. Let's go to the 15 minutes time frame or the 5 minutes time frame to see what happens. So you are now on the 15 minutes time frame for a confirmation entry. There are different ways, so you can use a confirmation entry. You can use a market structure shift. You can use an invalid fair value gap. You can use a CISD, whatever way you want to, right? So let's see what we have here. Some people can even use MSNR, MSNR, yeah. You can use that, but for me, I don't have all those times, so I don't have time to be looking for all those things. So let's see what we have here. Okay. So this was the place where price reacted, right? So you can see by this time I will still be sleeping by this time. So you can see why I said I don't have the time to be looking for confirmation entries. But let's see with invalid fair value gap. So you can see here we had an invalid fair value gap here. You can see that level. And you can see this level. So if you're an invalid fair value gap trader, you can just place your entry. Once we get that, place your entry at that level, right? You target to 1:2, or you can target a much higher RR. Maybe you target the closest liquidity point here, or just target this level. You can see you can get up to 3R or even up to 5R. I think you can get up to 5. Okay, no, just 4. But you can see if you prefer using CISD, for example. If you prefer using CISD, you can see our CISD. We have our CISD, I think is this level here. So you can just enter from there, stop loss at the current low, and then you target 1:2, 1:3. Just as easy as that. If you prefer market structure shift instead, you can still use that. Market structure shift is here. You enter at an order block, right? Or you wait for and how you prefer to enter. Maybe you enter anywhere. There's another block. We have we have this other block, so you can enter at that level, place your stop loss at this low or at overall low, and then you target 1:2. So you can see you can try different type of entries, but for me, I just enter immediately. I don't need all these confirmations. I will stress my brain. You get. So let's go back to our time frame. Let me show you another example. So that is one example. Let's see. Okay, let's see, what do we have. Now let me show you. Okay, let's see. Let's choose this day. So let's choose this as our day one. Day one and day two. So day one and day two. So let's see, what do we have here. So again, we mark our closing opening price. Obviously, you can see that this day was a bullish day. Open. Where's our closing price? Sorry, you can see that it was a bullish day, so there's no need to mark it again. So you have that. What are we going to mark next? I'm going to mark our breakout level. Our closest breakout level is this one. So let's mark it out. So now let's see, what do we have. You can see in this case, price went up and took out this high first. Price took out that high first, the previous daily high. Can you see that price took out that high first? Remember what I said, you can take a reversal here, but then I also say you could enter anytime once you get a bearish candle that touches this level. So here we got a breakout at this level, right? So you can decide to enter on a retest of the breakouts, stop loss at that high there, or for me, I do enter immediately. I don't have time, like I told you, I don't have time to be looking at the chart every second. So I enter here. Then you can see in this case we did not hit our full targets. Target is somewhere, we did not hit it. And what I do in this case, as long as the day is over, I close my trade whether in profit or in loss. So here I will have closed this trade here at almost break even. You can see that, right? So let's check for one more example. So I don't want this video to be too long. Okay, let's see. Let's see this day. I don't know if you're gonna get it set up here. So let's mark this as my day one. Day one. I'll mark this as my day two. So you can see the strategy is very simple. So this is my day one. That is my closing price. That is my closing price, and you can see obviously this day is bullish also. This day is bullish. We are moving upwards generally, right? So now we have that. We mark our breakout level. The closest breakout level we have is this one. This is our closest breakout level, right? Close to that open. So we mark that out. And in this case, price came to the breakout almost immediately. As price opened, after the first two candles, we got triggered into this trade. So my entry is going to be here. My stop loss is going to be here. And my target is going to be there, right? So that is it. That is just basically how the strategy works. So we have this. So you understand, I have already backtested this strategy, by the way, over 300 trades across three assets. That is on volatility 75 index, BTC, and on gold. So on volatility alone, I've done 115 trades. You get, my win rates remain around 60 to 70%, or should I name just to be more realistic, I would say 50 to 60% win rates with a 2RR. So that should be a decent win rate for most people. All you just need to do is stay disciplined. And again, I also came out with no losing months. That is over 7 months. The backtesting data covered 7 months, right? Maybe later I will talk more on the strategy. I'll explain it. If you want me to explain the strategy in much more details, you can leave it in the comment section. So